right?
Sure. The August summit is the BRICS meeting in Johannesburg. I'd like to talk a little bit about that, about the meeting in and of itself. But in terms of France asking and being denied, it's a big deal. It became a big deal when they completed a $1 billion liquid natural gas deal with the United Arab Emirates and paid in yuan. It became a big deal when Macron went to China, met with Xi Jinping, and left signing a 51-point agreement ranging from 5G technology to military engagement.
In this video, Andy Schectman discusses the importance of the BRICS summit in Johannesburg and its impact on global dynamics. He highlights France's denial of participation after a significant deal with the United Arab Emirates in yuan. The speaker emphasizes the potential breakup of G7 nations and the growing importance of the BRICS alliance. Additionally, he stresses Saudi Arabia's role in potentially shifting away from the dollar as the petro standard. Andy also advises diversifying assets with precious metals and mining shares for potential profits. Overall, the video explores the changing financial landscape and the significance of BRICS in the global economy. So let's watch the full video till the end.
It became very obvious to me that the G7 nations were starting to break up a little bit. And when you see him or saw him asked to be part of the summit in Johannesburg, it became very obvious to me. And for whatever reason, they did not allow him to go. But I think it sets a precedent that there will come a point in this journey where it becomes every man and woman for themselves. And I think what you saw there was a glimpse of that, with not only Macron breaking free from the dollar and placing a massive liquid natural gas deal outside the dollar in yuan, but also asking for admittance to what is a massive pushback against the dollar hegemony. When you see Mexico, our ally to the south, formally applying to BRICS, little by little, then all at once, we call that logarithmic decay. That was part of my presentation today, where little by little, and then all at once, things change, whether it be socially or economically or financially. And that's what we're seeing. And when you see our allies who are there with us in 2022 and sanctioning Putin and the whole supporting the whole pushback against Russia, to break free from that and to side with the BRICS is something that shouldn't be, I think, overlooked. It's a big deal. You know, there's been a lot of talk about Jim Rickards. Jim Rickards is here, and I can't wait to talk to him. But Jim came out and said, then again, that on August 22nd, the BRICS would issue a gold-backed currency. And there's been some pushback against that. And look, what Jim said to me also in that presentation that he gave, or the letter that he wrote, was more significant in the respect of the coalition of countries that he surmises will join together at this summit, namely the Shanghai Cooperation Organization and the Eurasian Economic Union. This is a massive deal, and here's why. If you Google how many countries have signed up for BRICS, you're going to see 41 everywhere you look. But when you count the countries, you'll get 25. Jim says that you're going to see the Eurasian Economic Union and the Shanghai Cooperation Organization join in with the BRICS. This is no small deal. The Shanghai Cooperation Organization represents 60% of the Eurasian landmass and 40% of human population. You throw in the Belt Road Initiative, which is 75% of human population, 152 or 3 countries, 50% of global GDP. With the BRICS, you have the majority of human population coalescing together. But what the crux of my presentation was today is all of these people, who I respect, many of them, who say that, well, I don't think the world will change August 22nd, even if they do announce a gold-backed currency immediately, it won't change. And I said, I agree with that. But nobody is saying what I've been saying for the past 3 years. They are ignoring the most important part of this entire coalition, and that is the Saudi kingdom and the moves that they have made. No one is talking about this. It's all I've talked about for 3 years. And when Saudi Arabia, which is the linchpin of the dollar hegemony, decided to join BRICS, it was a big deal. When they joined the Belt Road Initiative with all of the OPEC countries, it was a very big deal. When they decided to join the Shanghai Cooperation Organization, it became a massive deal. When they joined the BRICS New Development Bank, it became a huge deal. And when they told people at Davos they're open to taking other currencies for oil, it became an enormous deal. The point is simply this. When Saudi Arabia flips the switch, and by extension, OPEC decides to move with Saudi Arabia away from accepting the dollar in accordance with their relationship with the majority of human population who isn't going green, and add that to the BRICS, it becomes a huge deal. One without the other is only telling half the story. And I think that's what people need to understand. I've been consistent on that. The BRICS is the icing on the de-dollarization cake, if you look at it that way. But the loss of the petro standard, when every single country in the world has had to own dollars since 1974 in order to buy oil. For 50 years, they've all had to stockpile dollars. And if Saudi Arabia and OPEC says, listen, you guys, you guys are going green. You signed an executive order. By 2030, you say you're going to be 50% green. By 2050, almost entirely green. So we respect that. Have a good life. We want you to. Thanks for the memories, but we are joining with the folks around the world that comprise the majority of human population that aren't. And as a result, we're not going to take dollars anymore. And when that happens like that, everything changes. And I think that's the part that is not being talked about enough in people who push back against what the BRICS really means to the fate of the dollar. If you take the capitalization of every single mining share on the planet and you give it a value, it's less than that of Coca-Cola, I believe. So mining shares represent enormous potential. In the world that I envision the stock market ultimately, as rates rise or spike as a result of an event that would precipitate that, all stocks are going to take a hit. And I think if you put your assets into a pyramid, the way the Swiss have for 300 years, with the base of your pyramid being stable, sound investments, precious metals, cash, paid for real estate, earning a very low yield but are safe, the middle portion of your pyramid, maybe 20%, earns a small return with a little bit more risk. Let's say 6-month treasuries right now yielding almost 6%. The top 10% of your pyramid would be the cryptocurrencies, the mining shares, the home run. And I have learned firsthand that a small allocation to mining shares can outperform the rest of your portfolio if you hit it right. The leverage is extraordinary, but they shouldn't be confused with physical metals and mining shares. They are cousins, they are a derivative. One is wealth, one is an investment. I am a fan of them. They are underallocated, they are underowned, and they are undervalued, and they have massive potential. But don't make the mistake of using your mining share portfolio as a substitute for your physical metals. You should own both. One gives you profit, one gives you stability. I like them both. You'll see premiums on precious metals rise dramatically when the public wakes up. And maybe that comes when the next regional bank fails and Janet Yellen bails them in instead of out, as the law dictates. And then you'll see what anxiety and fear really is manifested in the public waking up to buy metals, and what that will do to a market that is flush right now and premiums are low and falling and availability is great. That'll change in the blink of an eye, and it always has. But I don't believe that you will see price depression last forever. And I know you want to say something. You can only manipulate or push a market in the direction. You can only suppress a market long enough to, if you're pushing back against the global tide of demand, you can't do it. You can only suppress or manipulate a market by pushing it in the direction that it is going. And for a very long time, people just wanted dollars. No one wanted gold, but the world is accumulating gold and silver. The central banks bought more over the last 18 months than ever before. You're seeing the same thing with silver. India buying 304 million ounces. The exchanges are being bled dry by the biggest money in the world, and they are using this suppression to run cover for their de-dollarization. And the West, who suppresses the price of gold to support the bond market, to support the theory of a strong dollar, and everything is okay. The one thing they didn't take into account was that the East would be standing with their arms and hands open wide, ready to take delivery at any cost. And that is what is changing the game, to the point where the exchanges are being bled down so much that this game has to end. It has to end very soon, because there's not enough ammunition to continue to short a market naked, where if you're called for delivery, the whole thing blows up. So no, it won't go on forever. Not in a market where the biggest, most sophisticated and well-funded money in the world is taking possession and pulling it off the exchanges. This is very close, I would think, to that moment where we wake up and prices go so much higher we can't believe it.
Andy Schectman discussed the significance of the August BRICS summit in Johannesburg and its implications for global dynamics. He emphasized the importance of France's denied participation after their UN-based gas deal and the G7 nations' potential shift. Additionally, he highlighted the potential addition of the Shanghai Cooperation Organization and the Eurasian Economic Union to the BRICS alliance. Andy stressed the crucial role of Saudi Arabia in potentially breaking away from the dollar as the petro standard. He advised diversifying assets with precious metals and mining shares for potential profits. Lastly, he pointed out the rising demand for gold and silver and its potential impact on prices. For more informative and insightful videos, like and share this video and subscribe now for more videos. Thank you.